Investing in crypto, tech stocks, and hard assets is the only option. And I'm about to tell you why. But first, subscribe to the channel, like the video. I appreciate it very much. So, let's get into it. So, I was watching a video, and I'm gonna put a link to the video in the description. Very good video. I've actually watched a few videos on this channel. It's a huge channel on YouTube. I really like it. It's very compelling. Videos are really long, but they're very good. It's the Diary of a CEO, and some of you may have seen the channel before, but you should go check the videos out. It's almost like a 60 minutes on YouTube, but check it out. But this particular one, I don't know if you guys remember, I did a video a couple weeks ago on stop saving money, do this instead. And it was about don't save money, invest your money, and wealth is made by investing money, not saving money. Well, I saw this, it said stop saving your money. I was like, oh, okay, clickbait, it works. So I started watching the video, and it basically was saying what I was saying in my video, but with a whole lot more in depth. And it was an interview style. It's four guys sitting around a table, the interviewer, and three very, very famous or well-to-do investment guys that are from different aspects of the investment community. One of which was Raoul Pal. I follow him. He's a big crypto guy. He's very well respected. I agree with almost everything he says. He was one of them. Jaspreet Singh is another investor that was on the panel, and then Humphrey Yang. So all three of those guys were being interviewed in this video, and just talking about why investing is so important and why saving is a loser, essentially. And I'm gonna really kind of expand on that and give you my thoughts on it. So for the longest time, we have been told that, even when I was growing up in the 80s and 90s, and even through the 2000s, that you go to college, you go get your degree, you get a job, that's the whole reason why you go get, you got to get your degree, because without the degree, you can't go get a good job. And then once you get your job and you get a good salary, and you work your way through the corporate job, and then you buy a house, you get a mortgage, and if you're lucky, you're able to put 20% down, and then you're able to save money, and you contribute to your company's 401k, and when you invest in your 401k, if you know halfway what you're doing, you diversify your money in your 401k, and most people, they're experts in what they got their degree in, and most people that go work jobs or go in a corporate world, and they work something that they didn't even get their degree in. So, and then you invest, and you just put it into just general mutual funds, and you just kind of let it ride, let it sit, and hopefully over time it goes up in value. Or you were taught, you should save your money, save. You got to save your money, and we talked about that in my other videos. Saving money makes you go broke. So that was what we've been taught. And for some to go get married, have kids, get your house, all those kinds of things. And that, for the most part, that made sense back then. Not anymore. The current reality is it's just not the same anymore. Now we've got, if you go to college, you're coming out with just tons of college debt. And when you do, there's not, the job opportunities are few and far between. When you do come out, you're looking at 10% unemployment. The big corporations, even Microsoft's laying off a bunch of people, and some of the big tech firms are laying a bunch of people off. So you're dealing with that. You're dealing with the inflation is soaring. It has been. We're not even really, we're getting it under control a little bit, but it's still going nuts. And then we've debased our currency. That's been a problem. And then, we've in the last 5 years, as you've heard me say, we've printed 80% of the money that we've got in circulation has been printed in the last 5 years. So if you're a Gen Z or you're an upcoming Gen Alpha, or you're a millennial, or pretty much anybody that's in their 30s or below 40, I'm about to be 52. I'm a Gen X, so I still am dealing with it. Me and my wife, we talk about how expensive things are, and we've been able to build up wealth because we were able to get ahead of it before all of this stuff started happening in the 5 years. But if you're in a millennial, or you're a younger, you're Gen Z, my kids are Gen Z, or you're even younger than that. Some of these young kids that are coming up are Gen Alpha. They have no chance of owning a home. I mean, that's just the reality of it. Then you start looking at AI is going to start eating into jobs. Yeah, I don't think people really understand the reality of that, how that's going to happen. It's going to start getting into hourly jobs. We talked about that. You start looking at fast food restaurants. It's going to start taking that away. Office jobs. Your just your general office jobs. If you can write AI prompts or write AI agents that can take a lot of that manual labor out, that's what's going to happen for a whole lot less money. And then you don't have to pay a salary. You don't have to have benefits, pay for benefits, health insurance, 401k, matching, all those things that goes away. And if you're a company, your shareholders. It's all about your shareholders. And if you can cut costs and increase profits to your shareholders, that's what you're going to do. That's your mandate as a company, a profitable company, a public company. That's what you're there to do. Even if you're a private company, your goal is to make more money. That's the whole point. So, and so then you start looking at the problem becomes the gap between assets and income increasing. So the problem is that asset prices are increasing, but income isn't increasing at the same rate. So you've got this delta where the asset prices of houses is going up, stocks, everything is just going up. Assets alone are outpacing job income growth. And so you have that big change in delta, you can't catch up. So all of these Gen Zs, these millennials out there that are trying to get ahead, how are they going to do it? How is someone right now, if you're in your 20s or your 30s, you're sitting there looking at this going, how am I going to get ahead? If you just kind of follow the old playbook and the way the textbook was written, you just throw that out the window. And so in this video, they were having this debate and talking about, and there was a little difference of opinion. Raoul Pal, I'm more in line with him that you have to take high risk now. If you're young, you don't have a choice but to take high risk. Obviously, the older you get, the less high risk you would be willing to take, but you have more at stake, right? You have a family, you have more wealth you're looking to protect. I tend to be a little bit more on the risky side at my age, and I always have been. I'm an entrepreneur. I've started businesses. I tend to take more risk. That's just the way I've always been. When you look at it, here's what's happening. And they talk about this in there, and it's 100% correct, is that the assets haven't necessarily changed value. It's that the money has lost value. And so that's the problem. So you take a house. The house hasn't necessarily changed value. It's the money has been debased. And so it takes more money to buy that value now. That's the problem. People think, well, this house has gotten so expensive. Well, no, it hasn't really. The value of the house still is relatively the same as it was. There's just more paper that's gone around, and now it's all worth less. So, and they use an example in the video. And this guy has the interviewer has a mug sitting on the table, and he says, okay, there's you three here, and if you want to buy this mug, how are you going to buy this mug? And they say, well, the mug is $10. Well, if somebody comes in the room and just gives you a whole big stack of more paper, well, all of a sudden you've got got more paper, you care less, right? So you're going to be able to have more paper. So now all of a sudden the mug becomes 150 pieces of paper instead of 10 pieces of paper, right? Well, the mug never really changed value. It's just the paper lost so much value that it takes more, and because you just are willing to throw more of that paper at the mug, right? Well, it's the same way with assets, and that's what's happening. We've debased our currency so much that asset prices have perceived to be higher, and so what happens is the rich get richer and the poor get poorer, and you have to find ways in order to outpace that. And that's why I say you have to go risk on. And the younger you are, the more risk you have to take. And so here's something you have to kind of think about. Do you realize that if you're 30 now and you retire when you're 65, let's just use that. You're 30 now, you retire when you're 65. You take $100 today, that will be worth $35 of buying power then, assuming 3% yearly inflation. That's a 65% loss. $100 today, if you're 30 now and you retire when you're 65, that $100 is going to be worth $35, assuming a 3% yearly inflation, which is pretty much what it is right now. That's how much value the dollar's lost. Let's look at how much we've lost in the past 5 years. That's crazy. And so when you start looking at that and you start talking about these assets and in crypto and Bitcoin and oh well, you invest in Bitcoin, and the arguments that you hear is, and I even see it in some of the comments that I've gotten on the videos, and even people that I know and I talk about it, it's always I can almost predict it's coming. It happens every time. Here it comes. It's the biggest one is, oh, crypto's a Ponzi scheme. In Bitcoin, it has no real value. It's not backed by anything. Really? And what's the US dollar backed by? We're printing so much of it, it's becoming more worthless by the minute. What is it backed by? Well, it used to be backed by gold, but it's not backed by anything anymore. Most things aren't backed by anything. The reality is money isn't backed by anything. So what happens is money, gold, the dollar, Bitcoin is all backed by social consensus. It's all that we all pretty much agree that the dollar is the means of exchange. We all agree that Bitcoin has value. We all agree that Apple stock has value. We all agree that Microsoft has value. We just agree socially as a society that these things have value. And so it's not, and whether they're backed by anything or not, and most all these things aren't really backed by anything. It's backed by faith and social consensus. That's the reality of it. We just have always been taught, the textbook says, oh, well, companies have, employees and they have buildings and trucks and all that stuff. Well, what is that stuff backed by? The dollar? Well, we're just proving right now that the dollar isn't worth anything, and it's losing value by the minute, right? So if you think about it, you know what the best investments are? The best investments are the investments that people don't want. Think about it. Nobody wanted Bitcoin. Look at it. Back in 2009, 10, 11, 12, and you could even make the argument right now. So many people, we're so early. People, it's $117,000 today as I film this video. People, the ones that are in the know, oh, that's so high. But there's so many people that don't own any Bitcoin. They don't have any of it, zero of it. So another example that you could use is Amazon. Do you realize that Amazon, it wasn't until 2020, nobody really wanted Amazon. The company was in the red. It wasn't making any money since its existence until the pandemic. And so Amazon stock, if you go look at it, nobody really wanted it until the pandemic. And then everybody wanted Amazon. Now look at it. It's part of the Magnificent Seven. So again, the best investments are the ones that nobody wanted. and now are worth a fortune. Same with Apple. If you had Apple back in the day, nobody wanted it until the iPhone came along. Then everybody wanted it, right? So these are the things that you have to look at. What are the assets that people don't want? Be early into those. That's what you're after. Invest in your skills and your network. Nothing replaces that. What are your skills? What are you good at? I have lots of skills. I can do a lot of things, and I have invested in those heavily since I was young, even before I was in college. Network. My network could be better. I haven't invested as much in my network as I have my skills. I've relied a lot on my skills, more so than my network. Some people rely more on their network than they do their skills. Preferably both is great. And in this video that I'm referring to here, they talk a lot about your network, the network effect, and being able to invest in your network. And investing in your network gives more back to you. The ones who invest in their network, it all tends to come back to them. And they give examples of that in the video. The best advice I could give you, especially if you're under 40, you're in your 20s, 30s, is to take risk. You have to take risk. And here's the thing. What do you got to lose? And when you're young, you have nothing. My dad used to tell me when I was young, take as much risk as you can possibly stand. I was with my daughter the other day, and she's working a job right now while she's taking an off year from college to try to go to the Naval Academy. And she's trying to get all that worked out right now. And she's doing a part-time job, and she's making some income. And we're helping her bridge the gap between where she was and where she wants to go. I sat down with her and said, okay, look, what are you going to do with this income? We're going to help support you through this time, but you've got some income. And she knows I'm big into investing, and she listens to investing, and she owns a good bit of Bitcoin at her age. And I think she sees what she put in it and what it's worth. And this has been over the course of the last couple of years. So we sat down and said, look, so you've got an investment account, a brokerage account, and then she's got a Roth IRA that we opened. And so she's taking money and putting it into the Roth, and she's taking money and putting it in an investment account. And so I told her, look, put it in the riskiest stuff you can put in. Put it in. Why? Because you have nothing to lose. You have nothing. What do you have right now? She's like, I don't have anything. I'm like, there you go. So no risk, no reward. So the more you lay out there, the better chance you have of getting somewhere. And so I said, you see what your Bitcoin, your crypto has done over the last year, 2 years? She says, yes, I have. And I said, there you go. And even her little younger sister, here's an example. They took money that was in a savings account that they collected from their birthdays and Christmas. So they get checks from their grandparents, 50 here, 100 there, and we would just put it in a savings account, which they just collected, making what? 0.01%. We talked about that. Well, about 2 years ago, and in the middle of my Bitcoin journey, and I've talked about getting into that, I said, hey, girls, this money is doing nothing. Do you need the money? Nope, don't need the money. Here, let's take it out and let's invest it. And we did. They invested the money, and now they're tracking it, and they're seeing they've quadrupled their money in a very short period of time. And so they're seeing it firsthand. So my best advice to you, if you're under 40, you're in your 20s and your 30s, and obviously the younger, the more risk, right? Take the risk. You have nothing to lose. Hang it out there. So what would I invest in? As I've said, hard assets. So what are hard assets? Let me give you some examples of hard assets. Bitcoin. Bitcoin is a hard asset. It's a commodity. A lot of people think it's a security. It's not a security, people. It is a commodity. It's been ruled a commodity. Real estate is a hard asset. I can go on about whether you should invest in real estate, especially right now. And I've been in real estate for 20 years, and I may do a video on that soon, whether you should buy versus rent and invest in real estate. But it is a hard asset. Commodities like oil, gas, timber, ag products, those are hard assets. Precious metals, gold, silver, diamonds, those are all great assets. I own gold, I own silver. I've been buying some of that lately. Prefer Bitcoin, but hey, I'm not biased. I like more Bitcoin, but I buy those too. Stuff like infrastructure, not very common, more so for businesses, pipelines, railways, data centers. The everyday person's really not going to be able to take something like that down, but you can invest in the stocks and equities that do, like mining companies, Bitcoin mining companies. There's a bunch of those out there that you can invest in, which is essentially investing in infrastructure. That whole space has been growing and will continue to grow. Physical equipment like machinery, trucks, again, hard assets, great stuff to have. And then collectibles, artwork, rare items. I remember I've got a baseball card collection, huge baseball card collection that I've had over the years, and I've thought about getting rid of it. Well, there was a time baseball cards were huge, and then they died out forever. And then here recently, they've made a big comeback. And then Pokemon cards, there's all sorts of trading cards that have come back alive now. So, all those kind of, hard assets are all good things to have. And, some you may like more than others. So diversify in hard assets. If you're just putting your money in savings account or even just the S&P 500, yeah, the S&P 500 is generally year over year, over time, is returned 10%. Okay, that's okay, but it's still really not moving the needle. They talk in this video about investing in dividend, and Raoul Pal talks about how, dividend is 3-4%. That's not doing anything anymore, folks. It's just not doing anything. Now, if you're in your 60s and your 70s and you're looking to preserve some wealth and you have a lot of it, okay, 3-4% preservation, okay, I can go with that. But if you're in your 20s and 30s, that's not you're not moving the needle investing in that stuff. Put that stuff in high risk. Look, if you fall on your face, and a lot of us have, we've put a high risk and it hasn't worked out, and we regroup, we fall down, we don't have much to lose, and we pick ourselves back up and we keep going. And so that would be my words of wisdom for you young folks out there. You gotta roll the dice when you're young, because you don't get the time back. We always talk about money, but the other side, time and money, are the two most important things you have. And we always talk about the money side mostly, but we don't really include the time element in there too. I'm starting to do some live streaming. I did one yesterday, first one. Hey, I'll keep doing them. Just, you got to start somewhere. I appreciate you guys watching the videos. It means a lot to me. Do me a favor, like this video, subscribe to the channel. I appreciate your time. Thanks a lot. Have a good one. Gen X guy out. See ya.